for coming out today. I'm excited to see you all here. I'm excited to share a little bit about bookkeeping and tax preparation. As Bev said, I live up in Castle Rock. These are my kiddos. They are very cute. My baby is now 2, so that's kind of crazy. Oh, this is very responsive. I usually stick to my numbers, so I apologize if my words get muddled sometimes. I also get very excited about bookkeeping, and I understand it's not everybody's love, but it is mine, and so that's why I started this bookkeeping business. It's kind of my passion project next to my kids. Maybe it's... There we go. Yeah, there we go. So one question that I get a lot is, what is bookkeeping and how is it different from accounting? Bookkeeping is following the generally accepted accounting principles, which is called GAAP. And those are the governing instructions that are used in the United States for how accounting transactions should be recorded and reported. This helps to describe and organize the movement of financial data in a company. So once you've done your bookkeeping, then your accountant is able to understand it and analyze the data properly so that they can give financial information and use it to analyze operational costs and understand the different impacts of financial actions that a business can take. Accounting uses that bookkeeping to be able to have a good foundation to understand a company's financial standing. Part of what I originally thought about talking to you guys about was just how bookkeeping works day to day. But 15 minutes isn't really enough time to do that. But if you want to know more, I love teaching people about bookkeeping, and I'm happy to help you out there. But there are 2 different ways that bookkeeping is handled, that the accounting process is handled. There's the accrual basis and the cash basis. And these are what you're using to tell the IRS how you're keeping your books. Cash basis is very simple. When the cash hits your bank or leaves your bank is when you tell your accounting system, okay, I've had an expense, I've got income. Accrual basis is when the income is earned or the expense is incurred is when you tell your accounting system it happened. So let me simplify that with a little bit of a scenario. You have a company. They send out an invoice for 2 months worth of work. On a cash basis, when the invoice is paid, is when it gets put on the books as income, as revenue. But in an accrual basis, it goes part into unearned income and part into your revenue. And as the second month comes around, then it moves into income. So it's a little bit different. It's much more complicated. But the accrual basis is more consistent treatment of the funds for the work that's done behind the funds. It's helpful for showing different assets to help get funding in loans as well. But being cash, as you've already heard, using the Schedule C doesn't disqualify you either from getting loans. So that's just a real simple outlook on those 2 different methods. These are things that you report to the IRS, and you don't switch between them year to year. Usually a small business will start out cash, and then as they grow big enough to be able to do accrual basis, they'll switch if it makes sense. But you do have to have your accountant fill out the form for it. I would say which year it is, but I probably won't say it right, so I'm not going to. One of the most important things in business, and as Bev was just talking about with getting mortgage loans, is having documentation. Behind every business transaction, you want to be able to have your source documents. You want to be able to prove that it is in fact for the business. When you've got that separate business account, then all of your bank transactions are coming through and you want to keep your receipts. There are a lot of softwares that allow you to take pictures of or email the receipts into them, and they'll hold them for you. You can do it on your own computer. There's lots of different methods for keeping receipts nowadays, so it doesn't have to be a big file folder, but it is important to keep those. And I always like to think of it this way, that in order to build your audit-proof system, you've got to start doing it every day, every time you have these things come through, so that it's not such a big stressful happening when an audit happens. So for loans, you'll want to have a full amortization schedule with proof that you're paying it on time, and you'll want to have your full loan agreement ready to go, linked to your asset account, or liability account in this case. If you've made an asset purchase, you need to have all of your paperwork, all of your receipts, and you need to be able to prove and show that it's not just an expense to the company, but instead a long-term acquisition. If you paid a bill, you need to make sure that you have the invoice that they sent to you with the correct dates and the way that you paid it. Things like this will be able to keep you organized, and they're expected at time of an audit. I always hear this, you put trash in, you get trash out, right? In order to make sure that you're not putting trash out of your accounting system, you need to make sure that you're putting all those good source documents in, so that you know that what you're getting out is, in fact, accurate and correct for your business. If you're using bookkeeping to have an easier tax season, then one way that you can do that is by familiarizing yourself with the tax season, the tax papers that go along with the business that you're doing. If you don't have your own business, this would be looking at the 1040s. This up here is the Schedule C that is used for an LLC or a sole proprietorship, or if you're doing self-employed taxes, this is also the one that you would be doing. They follow the profit and loss, which would be the accounting report that you would pull from an accounting system or from a bookkeeping system. You can see how they have the income, the expenses, and on the second page is where they have that cost of goods. This is why bookkeeping is important, and it makes it a lot easier. If you're always seeing a profit and loss, then you know what you're going to see on your tax forms. You know what you're going to be putting in. This is, in small terms, this is what GAAP is. It's the reporting part here, as well as the recording that we did earlier. For an S-corp or a partnership, they are using the Schedule E, which looks a lot like this Schedule C I have up here, so I wasn't going to put it in, but it's not liable for self-employment taxation. So that's the difference between the two forms, but that's they do look a lot the same because they're both profit and loss for the businesses. One thing that I do see a lot in businesses is they use payment processors like Venmo, like Square, or PayPal, and these are very common and they're great for businesses, and it's very important that you understand using them. There are personal accounts and business accounts for most of these, for all of these types of payment processors. If you're using it for your business, please have a business account. There are fees attached to it, but that is so that they will know when to be putting out forms for you. This year, the third-party payment processors were in charge of putting out 1099s for business transactions that went through their systems. So, myself as a bookkeeper, I don't put out 1099s for anyone that my anyone that my clients used a credit card for or Venmo to pay But the business Venmo accounts know that if someone was paid over $600 to their LLC, then they would be getting a 1099. They won't know that if you're using a personal. So it is on the business owner to understand that, even though it's going through that third party. The third party doesn't have a way of telling if you didn't already tell them you're doing business with these people. So the best way to be compliant and to keep your business running smoothly is to go ahead and get the business account, and then all of those fees that are coming through as part of the business accounts can be recorded as business expense. So you can write those off. And they do add up, that is true, but it is good because they are hiring people to send out those 1099s to remain compliant and things like that. So there's just little reason to fight the IRS so much. They work with you if you work with them. But using proper bookkeeping year-round will help to create an easier tax season and a better understanding of the business as well. No matter if you do your bookkeeping by hiring it out or doing it DIY, if you're organized, it makes tax season much easier. And it keeps you on top of things, like if you've already got your assets rounded up and you know what your assets are, there are sometimes tax credits that you can get for certain assets. Or you already know which pieces of equipment you used over $2,500. That's the limit this year for an asset instead of an expense. And if you can prove that it's going to last you a few years, then you can take depreciation on it instead of expensing it for the 1 year. But when you've looked a little bit closer at your bookkeeping, it can help you shine a new light on your business and help you move forward and not dread tax season quite as much. And that's what I wanted to talk about.